Welcome back to the Everyday Finance Podcast, where we are working with the everyday person to maintain financial security and establish financial independence. My name is Alexander, and I'm a South Florida realtor specializing in the Boca Del Rey area. And today, Garen and I are going to be discussing buying in a seller's market. Now, this is a hot topic, and I know we both have a lot to add to this, and hopefully we can add some thought-provoking things.
So a seller's market essentially favors the seller. Property values are heightened, and there's an added demand to sell personal property due to increased value that is brought to this asset. Now, this basically says that the value of property should be higher at purchase in a seller's market, meaning that if this is an investment property, you'll ultimately make less returns on your investment over time, just because a seller's market causes for higher values of property, meaning that if the seller's market transitions into a buyer's market and values drop, you'll actually lose money on your investment. So in this case, please conduct your due diligence because, at the end of the day, there still can be diamonds in the rough, even in a seller's market.
You know what? I think that was a perfect point to mention because out of some experience that I've had with clients of my own, I've been working with some investors and I have noticed that exact sentiment from them actually, being a little bit more worried about certain property types, the expectations they had from before on what they think they should get from a property. But realistically, it's not just a seller's market right now where you're going to expect to make less because you're paying more for the property because rentals have went up a lot and the rental market is extremely competitive right now. So while an investor may need to pay more upfront for a rental property, they're going to go ahead and put that on a 30-year mortgage, which I would recommend to anyone, even investors. And, they're going to go ahead and charge that new increased rental rate, which they can go ahead and lock in for as long as they please on their lease. Now, the reason we call a seller's market is it's because when all these buyers rush in, there's increased demand for these properties. And because they compete with each other, it ends up driving up the prices. Now, when they drive up these prices, it creates these sales that are done at higher elevated prices. And each one of these sales that gets booked, they're added in to market data. And realtors like myself, when conducting comparative market analysis of properties to determine values, we're going to have to use those properties being recent sales, and having those new elevated sales through competition is going to go ahead and raise the prices, which then again is going to cause people to compete for the lowest value properties or the lowest price properties to get the best value out of it. And, it's going to drive up that price again, and it's going to continue. And what we notice is, when those houses sell and they don't sit on the market, that is the seller's market. When these houses sit a little bit longer and when there's more houses for sale than people are currently buying every month, then it's going to be a neutral or a buyer's market. So right now we're in that seller's market, and that's what you need to understand, and that's what you need to look out for.
So now, it being a seller's market isn't always a terrible thing either. For the sellers, of course, this is great. For the buyers, you might be pulling your hair out and maybe thinking about, I won't say it. But overall, it's not a bad thing because there are certain things that you have to look into when it is still a seller's market. First of all, the first thing that you should look into is resources and supply chains. Just to see the costs of products, because think about it this way: if resource cost is going up, properties are forced to go up. For example, let's speak of it in the lamest terms, and that is in lumber, right? A property's value is forced to go up for the sole reason that lumber has gone up, and you build houses using wood as well. So there are a lot of things that can affect the driving of prices. So sure, that could indicate a potential seller's market, but that's not the worst thing ever because it's kind of covered. It balances itself out because the resource cost is increased, so the property increases. But you should also be wary of situations where that is not the case, where essentially it's just inflation, added demand, and an essential craze to purchase a property. That does happen oftentimes as well. So be wary of those, because those could also lead to market downturns.
Certainly. And, you know, I guess what I want to say and what I really want to get to in this video is to try to put out a few pieces of advice for helping people that are looking to buy right now in this current seller's market. You know, for individuals and for investors and even corporations, buying in this kind of market can be tough. It becomes a little bit easier for the corporations and a little bit easier for the individual investors just because they're more connected to the market and they can have their own professionals that they have relationships with. Now, if you're just a regular individual, chances are you haven't done too many real estate transactions in your lifetime, and you may not have a realtor that you recommend to friends and family. But one of the things that's actually probably going to help you the most in a seller's market like this is having a realtor. Now, some people don't understand how realtors, how we do our business here. They may help you out. You call them up, they'll send you some lists and whatever. But we do have agency relationship contracts. And in this market, since it's such a heavy seller's market, what I notice is, you know, the buyer's agents are feeling very cheated and mistreated. It's very hard for buyers going out there because they need to compete so much. So they're just contacting different agents and they're going around trying to figure out who can show them a property, who can get them in the door. And you know, these buyers agents, they're not giving the time of day. They're taking their time out to show properties and to try to help people with their searches, and they'll just move on to another agent. And for that, another thing is happening in the market, which I'm not happy about, but it's hurting these same people and it's creating a self-fulfilling prophecy, is that these agents now, they don't want to be buyers agents. The market's so competitive, it's so hard, they don't want to work with these buyers. They're either just going to leave them, they're never going to sign an exclusive contract with them, and they're just going to find another realtor, or, you know, they're just going to use them, they're going to bail, or they're never going to get approved. They're going to go in, see properties, and they're going to keep putting them down, multiple offer situations, making offers left and right several times a week, and they just never win because there's so much competition. One of the things, if you want to make this process smooth, is find a realtor. Interview a few if you have to, and sit them down. You're going to have that nice buyer's presentation, and you're going to sign that exclusive agency contract with them. And that means that that agent now has a fiduciary responsibility to you to make sure that the best transaction that can be made on your behalf is made. And that's going to help you a lot, because once you sign that paper, that realtor knows that it's a breach of contract if you go leave with another realtor, and they're going to work so hard for you, way harder than anyone that just called the office asking them to look up a property that they know of. That's how you're going to get someone to really work for you and put in that effort like you really don't even know how, because these are licensed professionals that have all the resources to be able to help you and to be able to get you in front of those people. Because when the market is competitive like this, you really need that agent to be able to be there, pick up the phone, make the calls, call the listing agent, submit your offers, and make sure everything is moving fast, orderly, and make sure you're completely prepared for the current market, because in sellers markets like this, things often change quickly.
Essentially, treat your real estate agent like your accountant. You know, a lot of people like to avoid doing their taxes and stuff like that on their own, for the sole reason that an accountant can maximize their returns and not mess up for the most part. So treat your real estate agent as an accountant, in the sense where if you can get one, you really should.
And, you know, since you mentioned that, it sounded like maybe you had some more to say, but, you know, that's another thing with buyers. I almost don't understand from the real estate side why people don't want to sign their exclusive contracts with their agents. You know, maybe you don't realize people complain about real estate agents that don't want to pay for it. But the thing is, as a buyer, at least in here, it is the very standard norm that the listing agent gets paid the commission and pays out to the buyer directly from the seller. So if you're a buyer, there's absolutely no risk to you. Your realtor might want to charge you a real estate fee, but at the end of the day, they only collect that if you close. And all that commission that you hear about real estate agents making, and you feel like that's too much, they shouldn't be paid that. That's fine. You're entitled to that opinion. But as a buyer, you know what? You can laugh at the seller for paying that money, and you can just enjoy the services of a professional real estate agent that will be there to take care of you and look after you in that transaction. Right. And, I think one of the most important things about buying in a seller's market is that, working with a realtor, it's good, but you need to be aggressive and you need to be ready. Your realtor, if they're good, they should really prepare you in a market like this. Honestly, you shouldn't be even going out to see houses if you're not already pre-approved, if you don't have everything in order and you're ready to move, because things are competitive and you're not going to have these situations very often where you're going to put in an offer on a property and you're the only offer. Unless that property was listed within the last day or two, chances are you're going to be competing against other offers. So you need to be ready to move forward as soon as possible. You can't be putting in an offer and then, waiting to see, okay, well, that was only a pre-approval or that was only a pre-qualification. Now I need my real pre-approval from the bank. And, you don't want to be dealing with that, because in a market like this, that's going to make you lose a property. And you need to make sure that after you do all your due diligence, after you've prepared yourself completely, once everything's been set up, everything's cocked, locked, and ready to rock, you got to make sure that you're there, ready, watching to pull the trigger right when it's ready. Because in markets like this, when it's so competitive and it's all about the sellers, you're not going to have that opportunity to spend all that extra time considering all the other offers, looking around at other things, because you may be looking for other properties when you want to place that offer, and all of a sudden it's gone. So the most important thing is use that realtor, have them find the best possible properties for you, and have them make sure that they can do everything in their power with all their resources to connect you with everything that you need to do to be ready to make that purchase and pull that trigger once you're there, because you may not have much other time.
Yeah, 100%. Thanks for that, Alex. On that note, go down into the comment section and go comment whether or not you will be looking for a home to purchase within the next year. And thank you for tuning into the Everyday Finance Podcast, where we help the average American maintain financial security and establish financial independence.